This is Chris Carlson, and welcome to the Boulder Banking Podcast. My guest is Jon Scott, professor of finance at Fox School of Business at Temple University. This was a fascinating conversation focused on the findings Jon uncovered in his research for his white paper, The Community Bank View of a Changing Tech Landscape. Jon, thanks for joining us today.
Well, Chris, thank you for having me.
You know, Jon, I'm so excited to be talking about your area of expertise, i.e. the technology and community banks. But before we get started, can you give us a brief background of Jon Scott?
Sure. I've spent most of my time as a finance professor. I started at Southern Methodist in Dallas. I did have a 7-year stint in the real world where I was at the Federal Home Loan Bank of Dallas as financial officer during the thrift crisis. Then came to Temple University in Philadelphia, where I've been for the last 32 years. Most of my research has been related to small firm access to credit with a focus on community banks. But as the topic of our talk is, I've spent my recent time working on getting to know more about community banks and the impact of technology on their business.
Well, Jon, what was the genesis of your recent white paper, The Community Bank View of a Changing Tech Landscape?
Chris, this started almost a year ago. I was attending a webinar online, and there was a panel that was addressing the outlook for financial intermediation, fintech, and DeFi, decentralized finance. And at the end, it suggested there was going to be very little future for community banks, that the fintech firms are going to cherry pick their customers and DeFi will totally disintermediate. There won't be any depositors. They'll go through, stable coins or whatever else. So there are two things I did. One, I got on YouTube to understand more about DeFi. But the other was that I wanted to start talking to community bankers because this just didn't feel right for me at this time. We have at Temple a financial services center, and I started with the local bankers there, who I worked with during my time as department chair, and then I expanded this nationwide with the assistance of my colleagues on the board of the Office of Finance of the Federal Home Loan Banks.
Let me ask you this, Jon. We talk about technology. What are community banks doing right in terms of their tech spending?
I think there's a couple areas where they have certainly expressed high degrees of satisfaction, and I'm basing this on my work with the Conference of State Banking Supervisors, where I've been working with them on their surveys since 2018. Major bank functions, BSA, AML, risk management, interest rate risk compliance, what's the common thread, regulatory. And it's been a cost that they have incurred, but they're fairly satisfied with this. I think if you look at most community banks, you'll see that, they have web-based banking. Now, some more extensive than others, more functionality. Everyone I talk to, has a mobile banking presence. And, there's not a lot of difference, but not a lot of difference between what you'd get from Bank of America and, your community bank. Now, I think, the other things where there's some progress, has been, remote deposit capture, electronic bill payment. Again, some of that is a web-based or mobile functionality. And then, where it's in progress right now is more on the workflow processing to try to improve some efficiencies with, the online loan applications and underwriting and approval.
Well, what's going wrong for community banks in terms of their tech spending?
Maybe I could recharacterize this as maybe what are the challenges. I think that what would go wrong for at least some banks, and interestingly, they were not too many of them were talking about themselves, but what they observed with others is that they end up, with with what I heard strategic dead ends. That is, they thought they needed an application. All right. And, they talked to someone else and they said, okay, here's what you should do. then bring the firm in. And of course, the firm can handle all of their problems. But it turns out, they spent the money and, it didn't work. It wasn't appropriate. So I think that what goes wrong is when they have a poor vetting process for determining what technology they want. I think when they do have something that looks like it's going to work, and oftentimes from their core service provider, the innovation, speed, and execution really bothers commercial banks. They give their CSPs low grades on this. And then I think finally, and again, you said, what's going wrong, but I think, the challenge is the ability to scale, with increasing fixed costs. I mean, they've got to, what I keep hearing from the private equity people is that it's scale, reducing frictions. And I think the challenge for the community banks is to figure out, what path do they need to follow to, find that scale and improve their efficiency.
Well, you mentioned core service providers. What are the biggest challenges community banks have with these CSPs?
Many. They're tightly tethered to their CSP. Let's say they're tethered, and that how tightly tethered they are with respect to their, kind of technology planning depends on how much they want to rely on that core service provider. Now, I mean, so the CSP provides their basic, their deposit systems, loan systems, investment systems, and all the reporting they need, to submit to the regulators. But when a new application comes up that they may want, their problem is, and this gets back to your previous question, the implementation time for new product development. I hear that it takes them a year and a half, and a fintech firm says they can get it done, in 3 to 6 months. Now, the fintech firm, it doesn't always work out. There's certainly some problems there. I think another thing that really, what really irritates many community bankers is that there may be a product that they want, and maybe it has to do with some functionality with their website, or added functionality to their website or their mobile banking platform. The products aren't, integrated. The CSP may buy a third-party application, but it's not integrated into their core system. And this can create problems down the road for them. And on top of that, if they bought this product, I heard frequently that they don't invest in it, and it's actually like they're just it's a cash cow. They're milking it, and then what was a good product is not a great product in the future. So I think those are. And then finally, and I certainly can't leave this out, pricing and contract flexibility are a big nut for the community bankers. When it comes time for renewal, some of these community bankers are hiring consultants to help them out because it gets so complex, and they get really irritated if they want a single application, they have to buy the entire suite, and it's their biggest cost. It is absolutely their biggest cost outside of people in terms of technology. And I found that there wasn't any major CSP that said, they all said, this is a great person. They all had problems with them. So I think this is more of an industry issue that has been percolating for a fairly long time.
So I guess the follow-up question there, Jon, and you can take either direction you want to go, is there a solution, and or is this cost sustainable for these community banks?
That's a really good question. I think where I see things headed, and even heard this yesterday in my conversation with a community banker in a rural area, but who has a great footprint and a great model. And he told me he's the only solution he sees is that he gets control of his data. his customer data, and then builds APIs into the CSP and working with perhaps, the right fintech firms so that he can he controls his data and how it's going to be used. So, he's going to be looking for a data scientist, and there's just one more sector that will probably be, increasing the demand for individuals with that skill. But I think I think what I hear from a number of people, we have to get control of our data, and then, we'll build, the interfaces so that, it's on us to get it right.
In that example, does that mean that they would disconnect from the CSP?
No, I think they still have the CSP, but then they'll build the connections back in, and they'll be responsible for this. And there are CSPs that some newer ones that say, here's what we offer, and words like agile programming. I know a little bit about this, but I think some of the newer CSPs that are trying to break into this market understand that we can, that they can give the customer, more flexibility in building out, the products that they want to give to their customers.
Well, Jon, you had mentioned fintechs. Are fintechs friend or foe for community banks?
When I left that webinar a year ago, it was clearly foe in all caps. But what was amazing, and so I asked this question. So as I started interviewing community bankers, well, how are the fintechs, cannibalizing your customers? And it was amazing. And I heard, well, not really. We don't see them. At least not on our radar. And this was, banks in largest metropolitan areas in the country, and then, more rural markets. So it turns out, there's the obvious example of Quicken Loans and Rocket Mortgage. All right. And yes, wherever you are, you could be in rural Tennessee, or in New York City. All right. Your customers could have access to Quicken Loans, but the community banks have adapted, and they have, they've got good relationship with mortgage brokers. If there's a problem in the mortgage origination process, the customer can call them, and the phone will be picked up on the first ring. All right. And that's not going to be true for Quicken. All right. And but also I don't want to pick on anybody, but Verizon or any other, these big companies. So I think that high touch, that helps them. On the small business or C&I loan side, the average size of the loans that many of these community banks make in the C&I space, are really too large for, a company like Cabbage. Now they watch Cabbage carefully, but they're looking at loans between $2,500 and $250,000. It's really a credit scoring model. And again, if you've got a problem with the business, if you've got a problem with your loan or some business interruption, who are you going to go to? And again, at the community bank, and this is really the heart of community banking, you pick up the phone, you can call the CEO or call the chief lending officer, and they'll work with you to kind of get past this problem. On the CRE space, commercial real estate, which has been the bread and butter of community banks for many, many years, most of the bankers feel this is really too heterogeneous for fintechs. The loans are too large. And there's a host of issues in the underwriting that does not make them amenable for a single, like a one credit score or a tax return, and then hope that if I put a large enough number of these loans in a portfolio, I can figure out what my average loss experience is and charge accordingly. So they don't see it, fintech as a threat there for now, but there's still a worry in the future. Somebody could figure out how to deal with these frictions involved in the CRE underwriting. I think the one area that is a real threat to some community banks would be what's called a neobank. It's really an online bank only. And there's Live Oak out of Wilmington, North Carolina, is one that's well known. What is it? NBKC. Kansas City's another one. There are several, and these are banks online only, but they have a specific niche for a particular credit product, and that could be a real foe. But for the most part, Chris, what I heard is they would be, I guess, is the way you posed the question, friends, because they're helping them, let's say, with workflow processing, their digital infrastructure, helping them to become more efficient, reduce, some of the frictions, let's say, in underwriting. And then also is banking as a service, which is customer acquisition that helps community banks expand their footprint.
Yeah, I want to go a little bit deeper on that. Can you clarify the roles of fintech firms with community banks in terms of building out digital infrastructure versus, as you said, banking as a service?
Sure. In the digital infrastructure, this addresses what one of the actually two of the issues that I hear from the private equity people, that is the scale and the frictions. So what banks hope to do and are doing, is finding a way to reduce or lower their non-interest expense. Now, there's going to be an upfront cost in this, so they're looking over time, how this can be reduced. So, the most obvious examples where there's been partnerships with fintech firms, although some of this has now been folded into the core service providers as they bought some of these firms, but it's in mobile banking platforms, ITMs, intelligent teller machines. Very few banks reported using this on the annual survey from the Conference of State Banking Supervisors. But I talked to 3 bankers in very different places across the United States that have effectively used these when they've made some acquisitions and they want to reduce branches in smaller communities. They'll put in these ITMs, and that for the most part, it's worked out well, where the customer can come up, touch the screen, and here's a live person. Now, that could be a teller who's not doing something, in the bank where they're located. So this is a way of improving efficiency. There's loan management platforms, credit analytics, and again, this kind of data warehouses, the APIs, and open system offerings. So that's all digital infrastructure, and a lot of firms of fintech firms are in this space. And then you have this banking as a service, BaaS. This is a cousin to software as a service. So banking as a service is sometimes referred to as renting out the balance sheet for customer acquisition. Now, when I said that phrase to some, after I learned more about this, to some of these bankers, they bristled, because they view, these relationships with these fintech firms who are acquiring customers as a long-term partnership, and they've got the same controls and risk management as any other product. So they don't view this as renting out. And it's interesting, the products, they go across the credit curve, from the riskiest customers to those that are low risk. Deposit products, credit building products, access to payment systems. And it turns out, the community banks are a natural partner for these companies, because their volume of business is so small, at least to start off with. No large banks, going to be interested.
Speaking of the community banks, does growing with a fintech firm challenge the idea of community for a community bank?
It does. I mean, and this is possibly an existential question for community bankers. There's certainly no shortage of threats, facing community banks. I think that some of the bankers that are very involved in banking as a service feel that the industry is going to have to grapple with this question of, what does community mean? If you're working with a fintech firm and you have a product that helps build a credit score, a credit builder product, where they get a loan, put it in a CD, and over time it builds up their credit score. I mean, if you're really effective in doing that, and have built, a good relationship, with your customers, is that a community? I mean, does community have to be defined geographically? I think that's what the industry will be, struggling with, because I mean, I think the banks want to think about bringing the same values that they have in their geographically defined community to this broader electronic community, and that generally means high touch service, being able to work with your customers, if they have a problem. So I think that this is a real challenge to community bankers, because if you're yeah how are you going to scale with a future that is going to be one where the technology costs are going to continue to rise? The ability to bend that curve, if you will, is really going to be limited unless you can create a broader revenue base.
John, I like that idea of the existential question. I think we all could agree that in the past we knew what a community bank was, but to your point, do we know what a community bank will be in the future?
It is. I mean, that's what has been so fascinating to me in having the opportunity to talk with all these community bankers. I mean, this has been one of the most professionally rewarding activities I've had, because of just how to kind of get an insight into how they're thinking about positioning themselves in the markets. And again, it's not just urban, ex-urban, or rural. And as I mentioned, I talked to a rural community banker yesterday who has really expanded the footprint, and again, using ITMs. So they're still in these small communities. They're still a bank. Another one doing something similar in the Deep South, and that bank office became a community center, but the ITMs, and that's just one way. So I think there are others who found specialization, in used car loans, believe it or not. So it's trying to find that niche, and then trying to exploit it and hold it. And I think that's the fear, that this technology, just the number of applications that are there for customer acquisition in different parts of the credit curve, investment curve. There's so many. And what do you want to pick out? And I think from many of the banks, for many of them, the bankers would say, look, you have to have a strategy. You have to have kind of a vision, what you want, and make sure you're true to that, that mission and that vision as you're thinking about your technology choices.
Well, are community bankers concerned that their fintech partners would ditch them and pursue a bank charter on their own?
Yes and no. I think many of them are always worried about that, and some of them feel. A couple of bankers felt that these fintech firms thought that they're just so much smarter than I am, and if they could find a way to get rid of me, they would. But Chris, on the other hand, there were quite a few who said no. They're very happy with their relationships, have worked closely with them, have some long-term, contracts with them. So different sets of experiences with the fintech firms. I mean, to start a bank today is a lot more expensive, than it was 10, 15, 20 years ago. I mean, I'm told, it's around $30 million. You're going to have people with a lot of experience. And if they're going to be a neobank, you're going to be all in technology up front. So it will not be for the faint of heart.
Well, John, how do community banks resist the urge to chase those shiny objects in technology, but stay on top of, the rapid evolution of product development?
Another really, really good question, because there was more than one community banker that said, don't fall for that shiny new thing. And so what I think has developed, Chris, is in some sense an ecosystem within the community banking industry to help address this really important question. So, what's part of this, ecosystem? Well, some of it starts with the state banking associations, where they will have help the bankers develop a digital strategy statement. There are other state banking associations, actually several, who have provided third-party assistance in vetting these firms, that they'll go out and talk to them, and then they'll put together panels with these fintech firms and, their members. And some even setting up kind of a speed dating site. The CSPs actually have technology incubators to where the banks can come in to the CSP's office and they'll have some of the firms there. The ICBA has a technology accelerator, Independent Community Bankers Association. And then I think the other is the other part of this is then just being, sticking to what your mission is and making sure you have a good process for vetting. I did leave out one other thing I just recalled is that there are private equity funds. One's well known, you can find online, JAM FinTop. And the community bankers can be limited partners in these funds. And then they have a twofold opportunity. The first is they get to view the investments that the general partners of the fund are making to see if it makes sense for them. And the ones that have a successful exit, then they can, profit from that. There's 3 or 4 funds like that. And even, and then one of my former students I was talking with yesterday, who's in the private equity business of raising capital for community banks, they're making investments in fintech firms, but then also introducing them to community banks where they think there's a good fit.
They get to look behind the curtain then.
Yes, they do. I mean, that's really important. I think it's important for both the fintech firms and the community banks. The one caution I was given is that everything sounds wonderful, but you also have to know, do you have any customers? What's your annual recurring revenue? And those are questions that certainly annual recurring revenue that community banks might not might not think of right away, but if they can use other resources in this ecosystem, I think they can make better decisions.
All right, Jon, I'm going to ask you to look into your crystal ball. What are the biggest opportunities and the biggest headwinds community banks will have when it comes to technology?
Let me address the headwinds first. I think this kind of market disruption, technology-driven market disruption, is just going to go deeper and deeper into the community bank industry. There may be some small isolated markets where, where the community bank feels safe with their depositors and who they're lending to, but I think that that's going to become more rare. The scale that's going to be required to deal with your increased regulatory costs, certainly in the area of cybersecurity. I mean, that's not going to end. And so to do that, you need to get, rid of frictions. How can I make better use of tellers, for example, when, they spend a lot of time where they're incredibly busy and other times, not doing a lot. So that's, and so the pandemic for many, but not all, kind of pushed them harder. But this headwind of scale and frictions, it's really driving the M&A on both sides. In the Conference of State Banking Supervisors annual survey, the inability to achieve scale or the need to achieve scale is driving those who want to sell and those who want to buy. I mean, it's absolutely the most important reason. And so, I mean, in these accelerating costs, are going to include, customer acquisition, retention of talent and regulatory requirements. So those are pretty big headwinds. But, I think the opportunities here, are many. I mean, there's so many opportunities to better serve your customers and really, use what you learned, what many banks learned in the pandemic, to kind of accelerate the trends that were in place, and tech support it turns out to be really important, and if you can answer that phone in one ring or have some chat bot that'll help somebody out, you'll keep that customer. And I think, the ITMs in rural areas, these are some opportunities for banks to, expand footprints where they may say, I can't afford to have an office there, even though there may be some, reliable deposits. Now, I think there are going to be, more developments in operating systems, faster product development, in this area of data analytics. And I've talked about data warehouses, earlier, that are going to give the community banks kind of better control over their kind of development process. So I think, along with the banking as a service growth opportunities, there are many paths forward for community banks, and their challenge ultimately is to find the right path.
Well, Jon, you shared some great ideas and some great discoveries that you had in your white paper. If somebody wants to go a little bit deeper with you, what's the best way for them to contact you?
Chris, I think the best way for them to contact me would be via email. And that address is ScottJon, SCOTTJON. So it's SCOTTJON at temple.edu. I would always be willing to speak to someone over the phone. My number is 609-922-4819. And I just ask that you leave an email because, most of the calls where I don't recognize a number, somebody wants to sell me power or car warranty services. So I'll wait to see if it goes to email or to voicemail.
Well, Jon, I know you have a lot on your schedule. I just want to thank you for taking time out of that schedule to visit with us today.
Well, Chris, thank you very much. It's a topic I've become, passionate about. I'm, passionate about community banks and, what they can do for their customers. And it's always a pleasure to have an opportunity like this. Thank you.
Thank you.